Alright, I want to give you guys a quick rundown of my haul strategy. It's pretty simple, but I want to start with indicators or just guidelines. Now, when you use these indicators the right way, they can be really helpful. So, we'll start with the studies. This is on a 3-minute chart. I prefer the 3 minute for the lower time frame. It is a little bit better than the 1 minute. Never look at the 1 minute if you plan on holding something for 10, 15, 20, 30 minutes or more. You'll just drive yourself crazy. I like the 3 minute. So for the studies, I have the support and resistance. It's Bueller's indicator. He gave the script for it. I have a hull moving average set to length 17, and I'll explain why I have all this stuff after I go through the indicators here. This hull uptrend downtrend, this was actually created by Ichimoku God. I'm still fine-tuning my strategy a little bit with what he created for me, so I may update this later on, but for now everything works like I like it. It's set to a length of 90. You can come in here. This does have the option to alert. I don't have it enabled right now because I'm playing around with it. The alerts don't seem to line up exactly how they should, so I just have it off for now. But you can go in through here and you can edit all your settings, and you can make everything however it looks good for you. This is just all set up because it's what's easiest on my eyes. And you can also turn arrows on, but on the lower time frames I don't like the arrows. It just clogs everything up. But on the lower time frames here, or the lower indicators down here, I have a whole moving average set to the length of 30, and I displaced it by 2 to the positive side, and that just helps to separate the two lines that I have down here. Then I have a whole moving average set to 25, a negative displacement of 2. Then I put in the TTM squeeze. However, I turned off the colorful parts of it because I don't care about that. The only reason I have it on here is for this volume comp bar. And I put that in there because whenever that bar goes red, it shows low volatility, and then when it goes to green, that indicates that it's firing and says that it's about to make a big move because volatility just came back in. So it helps in some cases. It lines up in just the perfect spots and lets you know to go ahead and grab it. So I like it there, but I have no need for the histogram part of it. Let's see, then right below that, this true momentum indicator. Again, this was made by Ichimoku God. I love it. The default setting for it is 6, 3, and 2, which are great settings. Those are the short settings for it. It works phenomenally. Now, playing around with it, I actually changed the length to 14 and 10, and I really like that because it calls out just a little bit longer of a trend down through here, and I'll show you that in a moment. But it's pretty helpful. And then I have this on here on this time frame. I don't like this on the 3 minute. I think it's pointless, honestly. It just clutters it up, but some people might like it. It's just a linear reg reversal line. It's a pretty neat indicator. I'll go over it as well. But like I said, on the 3 minute time frame, you really don't have any need for it. I just put it on there in case somebody wants it. And if you do want it on the 3 minute time frame, all you have to do is that button right there, shows study or shows plot. I have that one turned off, but either one of these will kick it back on. Okay, that's all the indicators for the 3 minute time frame. Now for the 15 minute here, on top. Oh, I had linear reg trend line on the 3 minute as well. That's just a fun little indicator to have in general. It's not required though. But on the 15 minute, the ones you want are a whole moving average set to the length of 4. This acts as like a short term trend. Then I have whole uptrend downtrend set for the length of 17. And these uptrend, downtrend indicator, basically this little box you see up here that says downtrend, it's what's showing those up there, and the arrows that you will see on the 15-minute chart, it's part of that indicator. Then I have the 17 is a longer trend for the 15 minute, and then I have a 10 haul set as well. It's a kind of a mid trend. So you got your 4, which is short trend, your 10, which is a mid trend, and your 17, which is a long trend, which we'll go over. Then down here I have the true momentum 6, 3, and 2. And then for the longer one, I put 12, 10, and 2, where the other set, or the 3-minute chart, was 14, 10, and 2. I like 12, 10, and 2 better on the 15-minute chart. And then again, I have the linear reg reversal down here. Go over that. Then the 1-minute chart. I mean the 1-hour chart. We have the reg trend line, a Hull moving average of 4, which again is the short trend, a Hull uptrend downtrend of 10, which again is that little downtrend box you see right there. Then the linear reg reversal, true momentum is set the same as the 15-minute chart, 12, 10, 2. And then another true momentum of 6, 3, 2. And you can overlay all this stuff just by simply dragging it. Alright, to get into the setup now, you'll see I'm just on demand here. This is June 4th, and I highly recommend, and I picked these 3 days especially because I like them the most, or even 4 days. The 3rd, June 2019, the 3rd, the 4th, the 5th, and the 6th. I like those days as far as showing you guys how the setup works. I'm going to go over day 4, 5, and 6, just to give you kind of an idea of how everything goes. And the pattern really presents itself when when the stock's doing what you think it will do. So if you're watching for higher highs and it breaks through and the indicators are green, that lets you know to go ahead and get in your position. You can stay in your position until the indicators go red. I set this strategy up specifically so it is easy to see and think. Like you see a lot of red and green on my setups, and that's just to dumb it down as much as you possibly can, because the more that you can think about your position and the less you have to think about, well, what's this indicator doing, what's this one doing, what's this one doing, the more you can watch at one time, the better your odds are at winning the trade. So I made this as easy to watch as you possibly can get it. But again, you can change any callers and any of the stuff that you need, except for the true momentum. It doesn't. For some reason, I can't get it to change. But yeah, anyway. So you also, on the 3-minute chart, you have to have Heiken Ashi candles. It plays a major part in this setup, and you can see why. Heiken Ashi determines the trend of the candle. This strategy is all about the trend. So if you get the the trend of the candlesticks here, you can see how well it plays in. Now, this big line here is a 90 hull. This hull overall is going to be the direction for your position. And as the day starts, you can see it's pointing up here. So overall, you want to watch for calls. I determined that by looking at the day chart and saying, hey, we got some green action here. Here, we'll turn those candlesticks real quick. You got a green candle opening up on the day chart. That will tell me right through here I'm only watching for calls. So when this hull starts to go red, that doesn't matter to me because I'm waiting for it to go back to green. Because once that hull goes back to green, and then over here on the 15-minute, it's going green. Your 1 hour is going green. That hull going green is going to let me know to start watching the 3-minute trend for a green entry. So I primarily, whenever I go to enter a trade, I primarily will watch the day chart and the 15-minute chart. When I see the 15-minute chart is starting to make green candles and starts breaking through supports or resistances, that's when I start looking for everything to line up. Now you'll see these boxes up here that say downtrend. You don't pay attention to those until you actually enter your trade. Because once you enter your trade, those boxes just act as a backup to allow you to know that, hey, I'm still in an uptrend. Now, in this case, this box is lined up to the 90 hull right there. This box is lined up to the 17 hull right there. And this box is lined up to the 10 hull right here. Now, these boxes will turn before the hull lines will. And what the intent was whenever like this hull right here turns from green to red, this box was supposed to turn green to red. However, somehow in the coding, this box will actually turn before the hull line will turn, and you can actually use that to your advantage because whenever you're in a nice solid position that's rising like right up through here, and you see that box turn from green to red, that's starting to indicate some weakness. So even though that 17 hull line here hasn't matched that box yet, that's starting to indicate that it might be getting weak right through there because that's fluttering and going back to green to red to green to red. So you could exit your position there, or based off of how everything else is looking, you could potentially continue to hold it. And this pattern will pretty much walk you through itself just by how everything is green and red. It makes it pretty simple. So back to the 3 minute here. You have a 17 hull. This hull here is your shorter average. You can enter positions and exit positions based purely off of this hull if you want. So if you see overall you're starting to trend green, then you see your hull 17 here is green. You could buy a call here and you could sell your call as soon as that 17 hull started to turn red. That's a nice, easy ride up there, and it's so easy on your anxiety as far as you see your 90 hull is green here. So you didn't get in through any of this stuff here. Even though your 17 was green there, you didn't get in because you didn't have the confirmation of your overall trend was going up. So as soon as you see that confirmation, you start watching for a green position. You see your green right there on your hull. That's where you get in. And once you can sometimes use the crossover as your get out. Sometimes it doesn't matter. It really depends on the price action. It's not something I can really just explain to you. It's something you'd have to see for yourself. But if you want to be safe, use a crossover as an exit on the haul strategy. It really depends on the timing and the position and everything. But here, I wouldn't have entered on something like this because, again, you're being below that hull. You don't know exactly what's going to happen. But once you break up through that hull, you can see your 17 is still green. You could get in there and you could get out as soon as it started to go red again. Or if you felt comfortable saying, hey, the 15 minutes still trending up, the 90 still green here, you can stay in your position and keep riding it up. Now, the thing with this is, again, these are the 90 is a guideline. Do not rely 100% on that when you're in a position. So if you get in on this run here and you're all the way up here and you have a really good profit, feel free to go ahead and take that profit. If you're feeling a little more risky or you want to make a little more money, continue to hold it for as long as that line's green. But at some point, make sure you take your profit and get out because this is pretty textbook right here. This is a pretty nice setup. It's not always this beautiful. See, you get some rough spots here, but we'll go over that at a different point if I can come up to it. But that's the upper part of the strategy. Now, if you come down here, you have a 25 hull average and a 30 hull average. The idea behind this setup is enter on the long, sell on the short. The 30 is the long. So whenever everything looks good, we'll say your 90's green up here. So you're looking for some green momentum. You see your TTM right here is low volatility. It wants to fire. You're breaking up through here, and so you see some green here on the 30, and that's your indication to start watching it for an entry. Then shortly after, your 25 starts to turn green right here. That's your entry. That the start of the 30 is letting you know to watch it. The start of the 25 is letting you know to enter it. Then when you buy in on the 25, you sell out on the 25. While you're riding it up, this 30 line will stay green the whole time, letting you know both the 30 and the green for the 25 should for the most part stay green. The 30 will stay green, but as you're riding it up, once you see this 25 start to turn red right here, that's your first indication to go ahead and sell out. However, if the trend is strong, you can see that the 30 stayed green here, so you could have stayed in your position, and eventually the green went, or the 25 haul went back to green and continued to push up. Then once the 30 started to turn red there, you got a little bit of a pullback. I don't recommend waiting until the 30 turns red, because by the time the 30 turns red, it's already, in most cases, too late. The 30 is, all of them are lagging indicators. The 30 length is a little bit too long for an exit. You want to enter close to the start of the 30, but you want to exit before these indicators turn red. The idea isn't to ride the entire position. The idea is to get in, make your money real quick, and get out with the security of knowing that this position is going to keep on rising. Even after I get out of it, it doesn't matter, because if you can get in it for a real quick ride up and you get 5, 10 shares or contracts or whatever it is, and you get a quick 20 to 50 cent run, and you had absolutely no anxiety on that run, go ahead and sell it, take your profit. It was that easy. This strategy is that easy. Now, you also have true momentum down here. This one is the longer true momentum, and this one is the shorter. This one's pretty self-explanatory, so I won't do a whole lot with it. But basically, whenever your short true momentum starts to go green and your long true momentum start to go green, that's an indicator to go ahead and get in. Or like, see, there's a good one. In this case here, your long-term momentum is red right here, and then your short one bounced up green and it started to go red. That could have indicated a short entry, which in this case was a horrible setup, but just as an example there. So basically, whenever both of these true momentums are the same colors is when you want to be able to enter a trade, have it lined up with everything else. You can do that however works for you, but like stuff like right here, both of these are green, those are green, that's green, that was green, that, so I mean, it's one of those common sense things. Now, the 15-minute. This is one of the biggest ways I determine what the market is doing when I go to day trade. I rely very heavily on the true momentums on the 15, more heavily than I do on the 3-minute. Because to me, looking at this, I don't go against whatever the true momentum is saying, and that makes it so much easier for me. So if that's red and I'm looking at the day chart here and I have a green chart or a green candle on the day chart and I see all that red, I'm not watching square for puts, because that candle on that day chart tells me that square wants to go up, so I have no reason to play a put on it and chance it. If I'm going to chance anything, I'm going to chance a call. So watching this, you see your short true momentum start to turn green. That tells me start watching it for calls. Then you have your 4 hull here is starting to turn green as well. Well, that 4 hull is what I call the short trend. Whenever that starts to turn green, that's telling you momentum is coming into that trend. Now, you can enter there if you're feeling comfortable about your position, or if you want a little more security. I actually added this 10 hull, which you can remove this if you don't want it. I kind of like it there. But if you want more security, wait for a candle to form above that 10 hull and wait for that 10 hull to go green. Once that 10 hull goes green and your other setups on your true momentum are green, that's a very strong indication that this position is about to move higher. Now, that 10 hull, as long as candles are forming above it, that's bullish. Once you get a solid candle that forms below it, that's when the position momentum changes. It's not always 100%, so wait for a solid candle to form up below it and then match it up with what I'm going to show you on the 1 hour and what I'm about to show you on the 17 and the true momentum here. And again, a lot of it is, it walks you through it. So the best thing that I can tell you is trust what the haul lines are saying, and that will get you the best trades. So I have this 17 haul on here as well. This one is the trending one. I like this because if I look up here and I see that says downtrend, I'm not even going to really pay much attention to it. Now, again, like I said, this only really matters once you get into the trade, because once you are into the trade, you are following that 17 trend. That is your trending direction. So if you get in here and you get a couple green candles here and you see this red candle, and you're like, oh well, do I go ahead and sell here? My true momentum is starting to turn red here, but this one is still green. What do I do? Do I take profit or do I hold it? Well, you could hold it through. Your 17 is still green there. Once you hit this point and you see this red start coming in, then you can make your decision. Do I want to go ahead and sell it? Because now that it's breaking below that 17, that means that the position is getting weaker. So do I want to hold it or do I want to sell it? Go ahead. I just take profit. But if you're looking at your 1 hour and over the setup that we're about to go over, and you say, hey, 1 hour is moving strong, I want to keep holding it, then your 17 in this case has never actually turned red, so you could still keep holding it. And eventually, as you can see, it pays out. Everything goes back to green here, and it's a good trade. Now you got your 1 hour over here. You got your 10 haul, which is what this trend one is set up to, and then you got your 4 haul. That I'm sorry, that actually needs to be a 2. I said 4 earlier. Oh well. But I'll correct that and I'll save that into the script. But you have a 2 haul. I like it better because it just reacts just a little bit quicker, which is better on the 1 hour. You want a really short haul on the 1 hour for a fast reaction. So the 1 hour is kind of funny. As far as the overall trend on this, being the 10, says that this position wants to move, like right through here. It says the 10 haul says this position wants to move down. Now with the 1 hour 2 haul, if you're day trading, that's where it really comes in handy, because if you're going to go scalp something, and you see this starting to go green here, but the 10 is red, you don't want to buy a call on that, while that's green. You want to wait for that 2 haul to go back to red and match that 10 haul, and then from there you can buy a put on it, and your overall odds are a lot better because you're matching up the callers and you're matching up the trend essentially. And just like here, when the market opened up, started to go green here, you got momentum. Here you're green, so all the way up through here you're green. These lines don't change as much as you think they do. So as you're watching this, and this is staying green, anywhere through here that you felt comfortable, you could enter this, and you could stay in this position until one of two things. Either your 2 hull turns red, you could go ahead and exit out of it, or as long as your 10 hull is green and you feel that price action is still going to continue to move up, and you're not breaking below here, then you could continue to hold this position. Your true momentums are green all the way through here. And it really can be that simple. So, let me see here. I will go over another day here real quick. On the 5th, you can see here, you got all this, oh my gosh. I don't even know why. I just had a brain fart there. Consolidation. Wow. So once you break up through your consolidation, that's where I would really be interested in it. However, if you're already anticipating that it's going to break through this, because say you're looking at your day chart and your candlestick is green, and mind you, that day candle will change red and green as the day progresses. But you're watching it at this time, and that candle is green, and you're anticipating it's going to break up through here. So you're watching this and you see this little bit of consolidation. Then you start to see this bigger candle start to break up through 64.30 right here. So you're saying, okay, you're looking over here at the 1 hour. You see you're starting to get a green candle, or I mean, green momentum on the 2 hall there. Your overall trend is green, and you're getting a green candle on the hourly. Your true momentums are going green. So you say, hey, I want to enter this. You go ahead and you buy your call. You can line this up. What is this? 11:15. You can line your entry up with the 3 minute here. See, your 90 is green, your 25 and your 35 are green, your 17 is green. So at any point through here, you could have used any one of these setups to make your entry. And if you want to be able to hold the position, you can either watch the 3 minute to hold it, or if you want to hold it for a longer time, watch your 15 minute. As long as this 15 minute is moving up and this 4 hall stays green, you can stay in your position. As soon as that 4 hall turns red, you can go ahead and sell out for a quick scalp if you want, or if you want to keep holding it. If that 10 hall is green, you can keep holding it. If both the 4 and the 10 go red and you don't know whether you want to keep holding it, look, is the 17 still green? If the 17 is still green, that says you can keep holding it. Now, mind you, as these turn red, as the 4 turns red, the 10 turns red, the 17 turns red, it's getting weaker. So you can see here the 4 is turning red, then your 10, and then your 17. It all follows. That's why I say don't wait until they all turn red. Get in, get your profit, get out. This is a very anxiety free way to trade, because with all the colors and with as simple as the setup is, as long as you feel your position is going to keep moving up, this is the backup that says yes, it will continue to move up. It is not 100%, but it is a huge help in my opinion. Let's see, we'll go over the 6th. You can see on Bueller's lines. I changed all the colors. They were all bright and stuff. Too many colors bugged me. So I just colored I believe it was the high and the low the previous day, and then I dotted the more minor support and resistance lines. But here's another easy day. And look, like, let's just say we're going to trade off just the 3 minute right now. If if you're just using the 3 minute and whatever other strategy it is that you do throughout the day, and you're watching this, and you're bullish on square. So right here, you see your 30 is going green, or your 30 right here is going green, and then your 25 went green just a few moments later. After your 25 went green, that would indicate to go ahead and buy your call. So you could buy your call. If you waited for the 90 to turn green, great. If you bought in right through here, then your 90 turns green after that, then great. That's your confirmation that yes, this is going to be an uptrend. So you're watching it. You're watching it. You can either follow the 17 or you can ignore the 17, whatever your fancy is. But as long as your 25 hull here is green, that lets you know you can stay in that trade. As soon as that 25 turns back to red, you can exit for a quick scalp. You would have been in at we'll say approximately 64.75. You would have been out at approximately 65.20. That's a 45-50 cent scalp. I mean, like I say, if you get multiple contracts, you get in, you get out real quick, and the whole time that you're in that trade, that 25 was green, that 30 was green, that 90 was green. It really helps to back up and say, yes, this will keep moving. But if you wanted to keep holding it, as you can see, for the whole duration of this 90 going up, you could have continued to hold it. But in this case, it really wouldn't have ended out too much better. And like I said, every day is different. Every setup is going to be different. This is just a basic idea of how to do this. If you wanted to only trade the 15 minute, which I'm working on being able to do that, I can't quite get my entries down properly if I'm only doing the 15 minute. But the 15 is very effective. Favorite time frame to trade. But anyway, again, I think I just went over the. No, that was the other day. Here, you're starting to break up through consolidation. Your four is green. You could go ahead and get in it. If you just want to do a quick, easy scalp on your 15-minute chart, once you see you get some momentum through here, or even once you see this candle open up, once it starts opening up green, you could go ahead and buy your call. Everything's green here. Your 17, your trending average is green. Your 10 haul, your medium trending average is green, and your four haul, your short trending average is green. So you grab your call, you ride it up to here. It starts to turn red. You go ahead and sell out of it, or you hold it until your true momentum. This is the big one. Like I said, on the 15, I always follow the true momentum because it is just so stupid easy, and it walks you through the trade. If your true momentum is green, your stock is going up. If your true momentum is red, your stock is going down. So I love it. I do not trade against that. I don't even like to enter positions early, based on that. Oh, I almost forgot about this linear reg reversal. This linear reg reversal acts as price action, and there's multiple ways that you can set it up. We'll do that real quick to make it a little bit easier to see. So essentially, what it does is, as your price is moving, this will match what your candlesticks are doing. So you see, you're getting ready to start making higher highs up through here. The price action went from being negative down here to it shot up. So while that's up and you start seeing your green present itself, that's just another layer of confirmation that lets you know that, hey, we're trending up and I can go ahead and try a call through here. Now, again, not always perfect. I always recommend to get in as soon as you see it go up, because as soon as you see it go up, that indicates that that trend is starting and is stronger than if you were to wait until like through here. But again, use it as you will. I only like this reg reversal on the bigger charts. For the shorter time frames, it jumps back and forth too much, and by the time you get it all lined up, it's just pointless in my opinion. But on these larger time frames, you can see it's pretty accurate for the most part. I just have it like this because it's more aesthetically pleasing to me, to easier to see, less cluttered. Then we'll go over the 1 hour real quick, and again, it's just as simple as the other ones. If you want to trade just based off of the 1 hour chart, here you go. Your true momentum, your short one is starting to turn green here. That can indicate, as long as your day chart it has a green candle, that can indicate some momentum coming in. Your 4 turns green, your 10, your trending haul 10 is green, so you could go ahead and enter a call through here. As you're in your position, your longer true momentum starts to go green, which tells you that the trend just got stronger. So at this point, everything's green, but this starts to go red. This is your short trend on your hour starts to go red. You can go ahead and sell off here, or if you are really bullish on it and you really think it's going to continue up, hold through this, and you know that as long as your 10 haul stays green, that you're still trending up. So then you bounce here, and if you want, you could go ahead and add to your position somewhere through here, and it starts to go up higher. And you can take profit whenever you want. You can set this up. I will have this whole setup on a larger scale, a 4 hour, a 1 day, and possibly another chart. I'm not sure yet, but I will have this set up for a larger scale as well to make it easier. But recap, the biggest best things that you can possibly do. Look at the day chart, whenever the stock market's first opening up in the morning, look at what your day chart candle is doing. Is it going red? Is it going green? Do not enter a trade the first 15 minutes of the market. It is wildly unpredictable. Anything can happen. After the first 15 minutes, everything tends to settle out and price picks a direction, and it's a lot easier at that point. So watch your day candle. Is it going green? If it's going green, you only want to watch for green setups. If the day chart has a green candle and the hourly chart opens up and it's really red, and you have the patience to sit there and wait, watch that hourly, because if that day chart candle stays green and that hourly starts to turn green, that's a setup for this. Well, here, yeah, right here. That's a perfect setup. The hourly opened up red, but the day chart opened up green in this instance. And I'm not going to rewind this all the way, but in this instance, I'm pretty positive that opened up green. So you could have watched it. As soon as you started to see green momentum here, that's when you can enter for your trades. On top, beside using the day chart, the next best one that I love is the 15 minute for if you're more of a scalper like I am. I personally only like to be in trades for 10, 15, 20 minutes if I can. The sooner I can get out of something, the better. I don't like to get into my swing trades until closer to the end of the day, where I can see what momentum is doing at the end of the day. That way, I know I have better odds of getting what I need out of the trade. Let's see. And again, on these boxes, only focus on them after you're in your trade. Then they just act as an extra confirmation. And if you're riding a call up and you start to see that box start to turn red, that means that your 90 trend is starting to lose a little bit of strength. And that could go ahead and indicate a sell. Or if you're feeling like your hourly is still really bullish and your hull never actually turns red, then you can stay in your position and wait for that to turn back to green. It's mostly there for aesthetics and to make it easy to see that your position is still trending your direction. But I'll end this video now. If anyone has any questions, message me. I hope I explained it the best that I can. It's meant to just be easy to see. So whenever you're doing your trades, just make sure as much of it is the same color as you can before you enter your trade. And while you're in your trade, as long as everything is the same color, you're safe to stay in your trade. The best thing I could say is, like I said before, trust what the hull is telling you. Trust the shorter trends of the hull for the most part. Like I said, as the positions get higher and stuff on like the 17, it's lagging. You can see here it was getting weak before the 17 actually turned red. But that's why you have the 4 and that's why you have the 10 to take care of this little sideways stuff. So this is really set up for every type of trader. As far as if you want to scalp it, there's your scalp. If you're feeling a little more risky, the 10 is your more risky line. If you really want to chance it, then your 17 is your really want to chance it line. Same thing with the hour. If you really like a stock and you see the hourly start to turn one solid collar here on the 10, you could go ahead and buy it. There's no good entry to show you, but if the 10 starts turning green right there and you say, hey, I really think the square is going to go up, then you could enter as soon as that 10 halls turns green, and you know overall that 10 haul is more than likely going to continue to trend up green, and as long as it stays green, you can stay in your position. Just match everything up with the true momentum as much as you can, match all the colors up as much as you can, and just make it easy. But let me know if anybody needs any help.